Hey, what's going on, guys? Welcome back here again. Another pre-week market analysis video with Corey Smith here with CoreFX, presented to you with T3 Live. Thank you guys for tuning in to another week here. Sorry about last week being a little bit of a shorter version, as we had a holiday here in the U.S. with Thanksgiving, and I was out of town and just a real busy week. Not too much going on in the markets as well with the holiday and the bank closing and all. So just wanted to get back onto the groove here, get back rolling. Again, appreciate you guys taking the time to watch these. Make sure you like, follow, and subscribe to T3 Live Trading. They got a bunch of great content here also with me, with Corey Smith at core.fx Instagram. But I'll go ahead and jump into it here, guys. Starting with, this is going to be the week for December 3rd, Sunday, starting the week. Going over last week first, and then we'll jump into next week. We cover everything from the top performing and biggest performing currencies, the news events, what's going on around the world and every economy, the pairs that we follow here, and then what to look for next week. We also cover technical analysis, going over each individual currency's index chart analysis, and then in the next video I'll upload here with a technical analysis breakdown of the major pairs and some of the movements and moves to expect here coming weeks. All right, guys, I'm going to go ahead and jump in here, starting with last week's relative performance. We have the pound, Swiss franc, and then New Zealand CAD, all are the top performers of the week, with the pound being the standout. Not too crazy of a week again here in the FX markets, but the volatility certainly picked up this week in the equity markets. So hopefully we see some continued movement, and then it trickles over to the FX markets. And this next week, I'm expecting to have a pretty good trading week. But you see the pound was a 1 full percentage point stronger. We had the yen a little over half percentage point lower, 59 points. So we've got small moves, not too strong of moves here, but we are seeing some movement. We got the pound, euro, and Aussie the weakest performers. I mean, the yen, euro, Aussie weakest performers, with the dollar there as well. A lot of this was the risk-on moves that we saw in the markets this week, with equities hitting all-time highs again. But we'll go over that in a minute here. Just want to cover these real quick for you guys, which one's the top and bottom performing. We like covering this because, as anything with traders, what we do is we want to put the probability in our favor to try to get an idea of what's going to happen in the week to come. And the best prediction or tool we can use to predict what's going to happen next is what has been happening recently and what has happened in the past. So typically, the most top performing and bottom performers, statistically, many studies have done, continue to be the top and bottom performers. So we use this data to try to get us a little bit of an edge to begin the week, as this stuff changes constantly and we have to be ready to change with it. This just gives us a little bit of an edge and a little bit of a guidance going into the weeks. All right, so taking it over to the charts. First, we have the U.S. dollar. This downtrend was violated with this new uptrend. We hit this resistance, and dollar has fallen off since. We are now back down to this very strong resistance level at around the 93 zone. So prices moved down. Last week we moved down stronger, violating this 50 SMA, and we've now hit support, and we're basing sideways. 20's curled over now, about to cross under the 50 SMA. Another bearish sign, but overall, structure's been violated, and it looks like we are continuing back to this downtrend. We've got what could be a little bit of a head and shoulders pattern forming here. We'll see what ends up happening with that. But, just trying to keep as many things open as possible. But overall, going to be looking for shorts in the dollar, because this is now telling me we are back into a downtrend, and until anything changes, that is where I'm going to be looking. And to start the week, that is how I'll be approaching it. Moving on to the euro. We had a sideways week after a strong week the week before, rallied up to this strong weekly zone here. It's a very critical inflection point, and we are now chopping sideways in this area. So really, we will need to wait for more guidance, but prices above the SMAs now, back to setting higher highs and higher lows. 20 is about to cross over the 50, so looks just like the dollar inverted. And really, we are looking for longs. That is where our bias is to begin, but this can change quickly, and we need to stay open. But this is how we're going to start the week, with a long bias with the euro. Taking us over to the yen, pretty ugly chart. Still, really, we had a really choppy week here, as fundamentally there was some back and forth stuff going on in the markets. Initially, we moved higher on the week. Then we had a hard sell-off amid the risk-on theme as, the U.S. tax plan was. I mean, it got passed this weekend. It just got passed overnight last night. But news that it was close to being passed, and the GOP, the Republicans, got the support that they needed, really. And there was just a couple people they were working on switching over. But this news was a very big catalyst for a risk-on move. The equities plowed into record highs, and this always sees the inverse relation with the yen. When equities are going up, the yen typically goes down. When equities are going down, the yen typically goes up. This is called our risk-on, risk-off sentiment, and the yen has been the top performing safe haven currency for the past few years. So money left the yen and went to riskier assets like the stock markets here, as we saw this crash in the yen. But then on Friday, news came out that Michael Flynn was going to testify against possibly the Trump administration, and he came forward about lying to the FBI, about about meeting with the Russian ambassador. So this sent markets catapulting to the downside Friday, which is why this strength returned to the yen, and we saw this big move up. Would have been a big losing week on the yen if this Friday event didn't happen, but Friday brought some gains back to the markets. So we're a little bit of a neutral outlook here with the yen, as we don't have any clear trend going on. Taking us to the pound, as we went over, we did break out of this range that we were stuck in, and price did move to the upside, broke above this nice weekly resistance here, and we are now up here into new high territories, going up to retest the 132.50 area. One thing I want to point out here with this chart is when we go to the weekly, as you can see with this Brexit move that we had happen here, with all these bearish moves to the downside, if I throw a Fibonacci level out here, you can see that where we are at now, and this resistance we are approaching now, from the Brexit move lower, is around the 50% Fibonacci level. So this is a real significant zone that you can see has held for a long time now. And really, this is going to be a critical point for us, whether it keeps going higher and goes right to retest it, or if we get some more choppy moves back up to it to retest it. All in all, I think if we are able to break this 132 to 133 range up here, we can see some significant moves out of the pound up to at least the 136 area. We've got some clear movement. So something to watch for here with the pound moving forward. But all in all, definitely bullish on the pound. Could have some of a correction after this strong move this week. We could see a little bit of a correction before continuing back up. But all in all, definitely bullish on the pound. CAD, another one who had a little bit of a mixed week. We were in this bear pennant. We broke out of the bear pennant, hit this support of it, which we thought could have meant we broke it and continued lower. But we had great news on Friday out of the Canadian economy. We had awesome jobs report, awesome GDP report. So this ricocheted back up, and now this bear pennant is no longer intact. What we do have, though, is this bear rectangle, as you can see under this weekly support now turned resistance. We have a range-bound CAD still within a downtrend. We've got this 20 SMA below the 50, sloping lower, 200 acting as support here. But all in all, the CAD had a choppy week and still remains in this range. So until it's out of this range, no clear direction. Although fundamentally, I am very bullish on the CAD now. Swiss franc downtrend was really invalidated after really this strong move on Friday. The downtrend was in question around here, then really in question around here, and now we've totally violated back above the SMAs, back above this structure, closed up here, testing the 200 SMA. And again, pretty sloppy price action, nothing too definite, but all in all, I would be looking more to the bullish side of the franc than anything. Australian dollar, we are still in this very beautiful downtrend that we've been in. As you can see here, the past couple of weeks, we've been really just range bound below this strong support term resistance and above this trend line and support down here. So until this base is broken, not too much movement to be expected. However, I am looking more to the downside as we are in a downtrend in a low basing pattern, and the Aussie's just been moving lower and lower and lower for a little while now. So definitely going to be on the bearish side of the Aussie dollar. Taking us to the New Zealand dollar, as we went over, we have been on this daily and weekly support zone here. We've retested it once, retested it twice. Now we're moving back down again, possibly to retest the 68 level again. We had a strong bounce on Friday, but all in all, we're still at this support level. Taking it over to the weekly, you can see a little better the strong move downward, and we are now in a sideways pattern, facing pattern above 68 on this strong support level that you can see all in here, where it's struggled to pass through all this time. So really like the Aussie and New Zealand to the downside, and New Zealand especially, because if this level breaks, we've got some serious potential space to move to the downside. So definitely be watching these pairs this week and looking for some opportunities to potentially join into this downtrend and hopefully catch some pips off it. All right, so that takes us over to the news events, starting with last week. We'll cover quickly what happened last week in the news, as we had some decent events going on, and then from there we will move into what to expect for next week and what to watch for as far as news goes. All right, so starting last week, Sunday and Monday really never had anything worth trading or following. Sunday had no events. Monday we had some new home sales beat expectations out of the U.S. and then some FOMC Fed speakers talking. No big deal. It wasn't Yellen speaking, so really nothing too crazy to watch for. Really slow day in equities as well on Monday. Really the low volatility was there. Equities pretty much flat on the day. Takes us into Tuesday. Tuesday we had another record close for U.S. stocks. European markets were booming as well, so real big risk on moves on Tuesday. Starting with the stress tests and stability report in the UK. This is pretty much all the banks were tested, as I went over last week, but they were tested with they put these stress tests into the markets ever since, the recessions and busts that the economies have had. They started doing these tests on the banking sectors, the big banks, to make sure that they can withstand financial instability if it were to come again without needing massive bailouts and all like we've had in the past, without them going bankrupt and people losing money. So they conduct these tests to stress test the banks and test how stable they are. And all the banks in the UK passed the most difficult stress test to date the first time, which basically just shows that the banks in the UK can withstand a difficult Brexit. They can withstand another recession. The banks are as ready as we are prepared to test them for. So that was a good sign. Started the bullish movement in the pound this week. After that, we had the Carney spoke on that same thing going on. But then we had Fed Chair Designate Powell. So this is who the president of the U.S. has chosen to be the next Fed leader to take over in February when Janet Yellen's first term expires. He testified before the Senate. They asked him all kinds of questions about, how he feels about different aspects of the economy, monetary policy, inflation outlook, moving forward, how he's going to react to certain things, what he thinks about legislation. Ton of stuff was covered. And as usual, he didn't give much info. The central bank tries to keep things off the books and keep it to their meetings only. And they kept questioning him about a rate hike in December this month. And although it's pretty priced into the markets, the markets are pretty much calculating that there will be a rate hike. He didn't say anything for sure. As he says, they like to bring everything to the meetings and go over it there before they make a decision. They don't like coming out and saying anything. However, he did say that there was a case for a rate hike in December. So a little bit of a hint there that there could be a potential hike for us. But then we had the consumer confidence report out of the U.S., and this, again, like I said, is the survey, like we covered last week. It's a survey of consumers to see how confident they are in the economy, and it blew away expectations, really. Continues to move higher and show consumers in the U.S. are likely to spend rather than save. This is a big growth indicator. Really is strong reading, and we like to see consumer confidence in the economy, as this shows that people are more likely to spend their money, buy a new house, buy a new car, invest in a new business, getting spending going, getting money in the economy, and really growing that growth in GDP. Following that, Bank of Canada's Polo spoke at a financial systems review. They released Tuesday. Not much reaction they had, so nothing really going on there. Then we had the New Zealand's financial stability report, like we got out of Bank of England. Not much volatility announced, as they said modest easing to home loans were likely to come, which will have minimal impact on monetary policy. So really the things in question over there with the housing market and all, the new government taking over and everything, shouldn't have too big of an impact on the monetary policy and the central bank. So not really going to affect us too much here as far as the FX markets go. And then after that, we had the New Zealand's bank governor, Spencer, spoke and really just said that mortgage is still the main topic, not much impact on monetary policy, still housing markets at the center of their focus. So not too much going on there. But the real news of the day here, Tuesday, was out of the UK for the pound, killer day for the pound, as it was reported that the UK and the EU struck a deal on Brexit. So basically, they set a roadmap for the future and a little bit of guidance as to how the Brexit will happen, and the negotiations that they've been trying to do for a while now are finally starting to get somewhere. And this brought some hope and strength to the British pound. Taking us into Wednesday, we had out of Europe the German and Spanish CPI numbers. Nothing great out of either one. Germany met expectations. Spain missed expectations. So again, Germany's report is provided as a monthly report. That's why it's a much smaller number. Spain's is a yearly report, so 1.6% yearly inflation is pretty low. Their 2% target over there in Europe is really directly affected by these CPI numbers, and this is a low reading. So central bank over in Europe has, again, no real signs of need to increase that. OPEC met also all day on Wednesday, and the real takeaway from that is that they had agreed to extend the oil supply cuts through 2018. This twice annual meeting, really a lot of drama and stuff happens around it, a lot of promises that don't necessarily always get followed, but basically Russia and everyone on board agreed to cut the supply, to extend the supply cuts, and supply cuts mean there's less supply of oil, so it's pretty much to continue to keep the oil prices higher, and we should see this continue to be the case moving forward. Then we had out of the U.S. preliminary GDP, which hit the expectations here of 3.3%, but as you can see, it was preliminarily what they had expected. It was going to be 3%, and we jumped up to 3.3%. So 0.3 percentage higher, very strong reading. 3.3% GDP is really good, the best we've seen out of the U.S. in a long time. And this is a very strong growth reading for the U.S. However, we saw a weaker U.S. dollar off of it. The dollar did not perform as it should with a reading like that, but that shows us some bearishness out of the dollar. But we'll see moving forward here how the dollar reacts coming ahead. Then we had Carney and Yellen speaking. Nothing really happened. Yellen testified before, just as Powell did. Asked him about how he would handle things and how things were with monetary policy and FOMC and all that sort. So nothing really affecting the dollar coming out of that meeting. She testified before, again, the Economic Committee of Congress, and it was just a ton of stuff going on. Her main takeaways was she said that inflation this year being so low and all was puzzling to them. Wage increases remain to be modest, so nothing too great, but wage increases are slowly moving. And productivity growth has been slow. So production in the U.S. has been slow. Those are her main takeaways, but a lot discussed, so nothing too crazy affecting the markets there. But then we have New Zealand dollars business confidence out of New Zealand. This report right here. This was a pretty bad report for New Zealand. It was terribly below expectations and was the worst reading they've had in 8 years. A lot of it clouding around the uncertainty of the new Labour Party in government. So with the housing market going on and the new Labour Party, there's just some fear amongst the businesses of New Zealand about the economy and the conditions that they are going to be in. But I think this will smooth out as the government kind of has some time to put things together. But all in all, bad reading for New Zealand. Expecting this to continue to add to the fuel of the weak New Zealand dollar, and hopefully we can get that push below support this week. Then out of Australia, we had the private capital expenditure. Again, I covered last week what this was, but it was just about at expectations, a little bit under. And then the building approvals month over month beat expectations. And out of China, we had better than expected expectations out of the manufacturing PMI numbers, which also affects the Aussie. And the Aussie went higher off of this news here on Wednesday. This double report here out of Australia and China. Thursday, moving on to Thursday, we had starting the day, we had European CPI flash estimate. So that's going to be this number right here. Again, we're still seeing very lackluster inflation numbers out of Europe. Their 1.6% prediction wasn't even hit, as we got 1.5%. So these numbers are really low. Again, it's not. These aren't the reports that we want to be seeing out of Europe. Yeah, they're doing good. The stock market's doing good over there. The economy's seeing growth they haven't seen in a long time. But there's certain things like with the U.S. as well, with the wage growth and the inflation numbers that just aren't picking up as they should be, which causes a problem for these central banks and really will stop them from hiking rates if this inflation number doesn't pick up, which is bearish for the euro as a currency. So the euro did drop about 80 pips overnight after this report. So it was a bearish report to the euro, but we'll keep an eye on this here moving forward as we develop. And then we had the real Chinese manufacturing PMI Caixin reading, missed expectations here. So that's going to be your stronger PMI reading, and we saw there was a miss. U.S. stocks did surge higher, though, Thursday into record highs. Dow broke 24,000. All of this really on the back of the optimism of the U.S. tax reform having the votes to pass, which it did pass this weekend. So 4 rate calls. This all takes us into Friday, which was really the biggest moving events of the day. We had manufacturing PMI out of Great Britain. Beat expectations again here. Twice in a row now we've beat expectations. And we didn't see much movement out of the pound here, as we saw some strong moves all week with the pound, with the Brexit negotiations. But this could continue to fuel, this could continue to fuel a stronger pound here moving forward, as the data is continuing to beat expectations. Out of Canada, we had the jobs report that we get monthly. This is sometimes on the same day as NFP. NFP is the first Friday of the month, but not when it's the first day of the month like this on Friday. So NFP is going to be next week. But we had the CAD employment reports. Jobs employment blew away expectations. 79,500 jobs created versus the 10.2 expected. Unemployment rate dropped from 6.2 to 5.9%. That's a big drop for one reading. And the GDP rose from 0.1 to 0.2%. So very, very, very strong readings out of Canada. And likely, as expected, the CAD jumped 120 pips in the first hour versus the US dollar, and then gained another about 100 pips by the end of the day on Friday. So over 200 pip move out of the CAD off this to the upside. And this is going to give us, I think, some more momentum moving into this week. I'm expecting the CAD to be a strong pair going into the week this week, based off this report that we had last week. So this takes us into next week. On Friday we did have a U.S. stocks. The U.S. stocks did tank Friday initially, recovered a little bit of the gains, but there was a strong sell-off as Michael Flynn investigation turns up, with Flynn pleading guilty to the FBI for lying in regards to the Russian probe investigation and their contact with the Russian ambassador. So there's still more to develop out of this story, but as long as this looms over the White House, we could see some more reports causing some more movements in the equity markets. All right. So this takes us into next week and what we have going on. So next week we start off Sunday. Not too much going on to start the week again as usual. And then Monday things start heating up a little bit faster than they have the past few weeks. Starting with Monday is going to be a very, very big day for Aussie. So make sure you keep an eye out any Australian dollar trades you have over the weekend or open Monday, as there's going to be some very strong moves. But we start with the European Spanish unemployment report. Again, not much impact. Europe is a big region. Spain's just a small part of it, but it is one of the top economies, so definitely something worth keeping an eye on and following here. And then we have the construction PMI numbers. We get some more PMI numbers out of the pound this week. Construction PMI is going to be the Purchasing Managers Index out of the construction industry. It's a monthly survey of the purchasing managers to get a leading indicator of economic health based off the construction sector. Following that, we have Reserve Bank of New Zealand Governor Spencer speaking on inflation and monetary policy, but nothing too crazy expected. Definitely worth keeping an eye on, but not anything too crazy. And then out of Australia, we have the current account, which is going to be the difference between the imports and exporting of goods, services, cash flows, all this kind of stuff. It's a quarterly report, usually moves the Australian dollar decently as it's a direct report of the demand for the currency. It shows us directly how much demand or not so much demand there's going to be for the Australian dollar, which is all of what determines the prices of these currencies. Supply and demand determines price of anything, especially currencies. Then we have the retail sales monthly report out of Australia. We've had terrible readings for the past few months. Hopefully this picks up here if they want to see any move to the upside, but if not, we could see this downtrend that we showed on the Aussie continue. It's really just a monthly retail report gauging consumer spending. Then we have the double whammy report. Actually, we have a triple this night. We have the services PMI number out of China, which we know affects the Australian dollar. And then we have the RBA rate statement that we see out of the RBA, again, coming this month. The last statement, they held rates as expected at 1.5%, as they haven't hiked rates in 7 years. And they said that although the rest of the world is hiking their rates, theirs is going to be dependent on their own domestic conditions, which they don't feel is anywhere near ready to hike rates yet. Everything last meeting really remained unchanged as far as their forecast and outlook goes. So this meeting will just look for any changes in rhetoric or outlook, and we're expecting again rates to remain at 1.5%. But typically some volatility around these events, so good trading opportunity or time to get out of a trade that you have with the Aussie going into it. Again, another PMI number out of the pound on Tuesday with the services PMI. These are good for a 30, 40 pip move overnight if you're looking to catch a trade with the pound, or if you're already in a trade and looking to potentially move into more profit. Then out of Canada, we have the trade balance. This is going to be the difference between the imports and exporting goods, and they missed the last two, so we could see some CAD movement off of this report one way or the other. Same report out of the US dollar. Not too big of a trading event, not too much of an impact on the US dollar, but something to keep an eye on. Then we have the non-manufacturing PMI out of the US. This is going to be our PMI report surveys for all of the non-manufacturing businesses. Could have decent move, not too crazy, but something to watch. And then GDP's quarterly report out of Australia. It was either at or beating expectations the last three reports, so a miss could cause this continuation of the downside that we've been looking for, and maybe even really continue it if we get some bearishness out of the Australian Reserve Bank. All in all, big mover for the Aussie this week, and the GDP is just another good report to be watching. Wednesday, we have the Bank of Canada rate statement, so the second rate statement for the week. They kept rates unchanged as expected in the last meeting at 1%. And again, in this meeting, they are likely to remain unchanged. They were very bullish with lots of great data, hiked rates twice this year, and then in the last meeting, they didn't. And the data coming out of Canada has been poor since then and since the last hike, so there's a good reason for them not jumping into another hike. Last week, we saw really strong employment and GDP out of Canada on Friday, so maybe we could see some more hawkish rhetoric and some more hawkishness out of the Bank of Canada this week, this meeting, as last meeting was pretty bearish and really continued the decline in the CAD. But I think there's some grounds for some better rhetoric out of the Bank of Canada this week, and I am expecting to see some more continued upside out of the CAD. Then we have the trade balance out of Australia. Again, imports, exports, they're always typically net positive. So this is another just little small mover, but something to keep an eye on. Thursday, we have the ECB, Draghi speaking. This unemployment claims, this red one out of the U.S. is a weekly report. Doesn't typically cause too much movement unless there's a big miss of this number, but typically it's pretty on par. We have ECB, Draghi speaking at a conference in Germany. Not much movement expected, but definitely keep an eye on it. Our final GDP report out of Japan for the quarter. Again, this is a final report, so it's going to be the second report, which is the last and final version. Not much expectation of volatility, as the preliminary report shows us, the initial report shows us the fresh number, and then this is just going to be an adjustment of the initial report. So nothing too crazy. Then we have China's trade balance. Again, one of the biggest economies on the planet. Definitely worth watching. Always massively net positive. So we'll wait to see. They've been missing it for the last few in a row, but still a strong exporting nation, and they have a pretty strong balance sheet. So we'll have to keep an eye on this trade balance here. And then Friday, one of the biggest events of the week. A lot going on, though, this week. We have manufacturing production monthly report out of the pound. Beat it 3 times in a row. So We'll wait to see what we get out of this report, and it's typically a decent market mover. Again, like the PMIs, good 30, 40 pips overnight, something like that, but could boost some momentum into the pound to finish out the day on Friday. And then out of the U.S., we have NFP. Again, we know this is the first Friday of the month every month. Didn't fall on last week's first Friday as it was the first day of the month, but it is going to be this week. NFP's last report last month was pretty terrible. Missed average earnings. So the average earnings growth missed expectations, jobs created missed expectations, and unemployment rate actually did tick lower, which is a good sign, but the other two were pretty bad. And it's a real volatile event for the U.S. dollar, so make sure you are very careful trading anything with the U.S. dollar around that, as there are some very choppy whipsaw type trades. This is one of those news events that I typically don't trade and don't want to be holding a position going into, as there's always a lot of volatility. And it's not always clean. It's not always smooth and in one direction. A lot of times it just whipsaws back and forth one way or the other, stopping out every position that people placed and just collecting money. So really keep an eye out for this report, but we'll see how the dollar reacts and what kind of jobs numbers we get. Now that the hurricanes are all cleared out, we have some normal holiday season type of reports to be coming. And then we have CPI, PPI, inflation readings out of China Friday night. That should help with determining how the gap opens on Sunday. But other than that, nothing too crazy going on there with those numbers out of China. Nothing really we could be trading except for anticipation on the gap with Sunday markets, how they open. But that'll do it, guys, for this coming week and the prior week. And giving you guys a little bit of a all-in-one spot to check everything to keep an eye on coming forward here, get a little bit of an idea what to expect with each individual currency, how they look technically, how they look fundamentally, and then which news, which days to look for. Please leave some feedback if you like these videos, if you have any recommendations or anything. I really do appreciate it. I love making these videos, but I love even more getting some feedback from you guys and hearing that people actually find some value in it. So please, guys, let me know. Like the video, share it with your friends. Subscribe, and I'll turn on your notification alerts here with T3 Live Core FX. And I really appreciate you guys taking the time to come and catch these videos. I hope you have a good trading week, and I'll see you in the next video covering technical analysis.